BTC is a staple in any trader's portfolio. Bitcoin and cryptocurrency prices have suddenly crashed lower, falling sharply after weeks of malaise. Today, we are talking about a possible Bitcoin crash that may have many implications for our trading game. The Bitcoin price dropped under the closely watched $30,000 per Bitcoin level as smaller cryptocurrencies, including Ethereum, Binance's BNB, Cardano, Ripple's XRP, and the meme-based Dogecoin recorded double-digit percentage losses, wiping away $200 billion in value over the last week.
Bitcoin is really volatile.
First, let us take a look at the BTC US dollar 4-hour chart to gain some perspective. Here, as you can see, BTC is in the shorter descending pattern. As you can see from the chart, we have been witnessing consistent lower highs and lower lows for Bitcoin, and there are no higher lows as we would like to see, and these observations clearly can be identified as a short-term downtrend. The price has dropped under the closely watched $30,000 mark, along with ETH, Cardo, and Ripple XRP, as we mentioned earlier. The sudden Bitcoin and crypto move towards the lower coincides with a global stock market sell-off on July 19th that saw the Dow Jones Industrial Average post its most significant one-day point drop since October as fears mount the highly contagious COVID-19 Delta variant could set back economic recovery efforts.
Yes, due to COVID.
However, if we do not establish more substantial support for Bitcoin and uptrend, that might affect the coin's performance. Nevertheless, as far as Bitcoin is in this 4-hourly uptrend on the RSI, it will be good for the price and soon start a short-term uptrend.
That had better be true.
The line of resistance is descending, and if Bitcoins do not break above the level of 33,500, then BTC will be continuing in the short-term downward trend for a more extended time. And that points to the fact that Bitcoin will be forming a lower high compared to the previous high for Bitcoin, which needs to be changed to start a new higher high than the previous records. Suppose this downward trend continues in a rather consistent manner, not by plunging suddenly and recovering, but by slowly and steadily decreasing. In that case, there is the chance of Bitcoin's value dropping to $27,000 per Bitcoin. Of course, this is a rough calculation, and we expect significant support to sprout in the next few days. Still, it is also essential to understand the possibility of decreasing trend as we are waiting for a confirmed break above resistance or confirmed break below support. The OTD Desk's balance chart made by Glassnode is also worth understanding. The balance or outflow is structurally going downwards. When OTC does not have any more coins to sell, the armed forces become dry. So is the OTC desk repurchasing Bitcoins and investors are selling? This could be very bearish.
Damn it.
The next chart shows you the total supply in the loss for Bitcoins. At the time of making the video, 6.2 million Bitcoins are held at a loss, which is around 33% of the supply. So when the coin is held at a loss, traders who are not familiar with the market history and the potential of change might find it challenging to deal with the situation and sell them, which would make the market bearish. The liquid supply change of Bitcoin is the following chart under consideration. This displays the amount of Bitcoin that is liquid that can be sold or transferred. As we can see, there was a rapid decline in distribution after the May sell-off. However, it is returning to accumulation, and this means more Bitcoin is being held in long-term storage. This indicates bullishness because the chart gives a positive idea about the chances of selling and liquidating Bitcoin. The final chart shows the exchange net position change. As you can see, the chart gives you an idea about inflows and outflows. During this partly bull run-top, many Bitcoins were being pushed into the exchanges to sell them. As per the chart, 36,000 Bitcoins are being taken off the exchanges per month. So this again is bullishness.
Bull market, bear market, you name the market.
The crypto market is highly accessible as it is decentralized. Two topics stand out in the most recent movement. The first is the news cycle. The second is crypto exchanges that offer leveraged trading, which allows a trader to borrow money in order to multiply their earnings and risk. Stage 1. Market Euphoria. There were multiple volleys of crypto good news, with it being reported that the likes of Tesla, MicroStrategy, and Grayscale Bitcoin Trust had invested heavily in cryptocurrencies, especially Bitcoin. And with fears of US dollar inflation, the crypto market gained even more attention and grew exponentially in the number of participants. leveraged crypto trading has essentially created a market in which neither investors nor traders know absolutely what the fundamental base values of cryptocurrencies are. And this is also what allows for the peaks and troughs during market movements compared to traditional assets. Stage 2: Growing fear, uncertainty, and doubt. On Sunday, April 19th, a flash crash surprised the Asian market in the morning as Bitcoin's price plunged by more than 10% in a single hour. Experts discovered that a regional power outage in northwestern China might have caused several Bitcoin mining rigs in the region to shut down, dropping the hash rate, causing a slower block time, and increasing transaction fees. Unfortunately, lacking in the fundamental understanding of how the Bitcoin protocol works, many retail traders sell, igniting a chain of panic selling.
Don't panic. Don't panic, yes, don't panic.
Stage 3: Continued sell-off and accumulation. As the price recovers timidly, on May 12th, Elon Musk announced that Tesla, the company that had bought $1.5 billion worth of Bitcoin in February, planned to suspend payment in Bitcoin for its vehicles, citing environmental concerns. Again, this caused the price to fall by more than 10%. In the following week, more crypto bad news caused leveraged traders to give up their position as China executed a strategic crackdown on China-based crypto mining facilities.
Thanks to my Uncle Tommy in China, we got another chance at this.
Despite the negative news, experts believed that the crypto market is experiencing a correction and is clearing the market of leveraged traders, allowing space for long-term investors to take over. As we saw, Bitcoin's swing range has declined recently, forming the basis for a powerful exit with a compressed spring effect, says Alex Kupcikevich, senior financial analyst at FX Pro, who warned the bottom could be about to fall out of the Bitcoin and crypto market. A sequence of increasingly lower highs is a significant selling factor. Given the fear of missing out nature of cryptocurrencies, a prolonged consolidation is increasingly frustrating for speculators. The main question now is whether Bitcoin fell to the levels near $23,300 where it paused before last Christmas. We cannot rule out that with massive liquidation of margin positions, the price will even close the gap at $18,000. Overall, such a reversal would be a repeat of the 2018 so-called crypto winter, opening the possibility for a price collapse towards a bottom near $10,000 and nullifying the rally since October 2020. The Bitcoin price, having tested the $30,000 level repeatedly over the last few weeks, appears to have been spooked by a cease and desist order that was issued to New Jersey-based Bitcoin financial services platform BlockFi by the New Jersey office of the Attorney General and the Bureau of Securities last night. The story, reported by Forbes, triggered a wave of selling as investors feared this could be part of a broader crackdown on the myriad of crypto lending platforms that have sprung up over the last couple of years. BlockFi offers interest rates to depositors between 0.25% and 8.5%, depending on the crypto asset and deposit size. The regulatory action is the latest in a string of blows to the Bitcoin and cryptocurrency market that began with China's latest crackdown on crypto miners, who secure cryptocurrency blockchains with high-powered computers in return for freshly minted tokens in April. Since then, major crypto exchange Binance has seen a wave of pressure from regulators worldwide, with many warning against investors using the platform. Meanwhile, US regulators have turned their attention to the booming stablecoin market that swelled to a $100 billion value over the last 12 months. Yesterday, Treasury Secretary Janet Yellen met with various other government agencies to discuss how stablecoins should be governed. These analyses lead us to the question, will crypto prices recover after the drop? There is no reason why the crypto market would not recover. Just because leveraged bullish traders are on the losing side doesn't mean that cryptocurrencies will fade away. While many focus on the negative news, positive developments support cryptocurrencies at the fundamental level. A bill to make Bitcoin legal tender in El Salvador was proposed by President Nayib Bukele and was passed swiftly, making the country the first ever to adopt Bitcoin as one of its official currencies. Other Latin American countries are rumored to follow soon, such as Paraguay, Mexico, and Panama. Independent of market conditions, Bitcoin, Ethereum, and many popular crypto networks are getting upgraded. After many incremental core updates that fell under the radar of most retail buyers, Bitcoin will undergo a significant transformation this November with a Taproot update. Bitcoin transactions will become more private and efficient, which can pave the way to add functionalities such as advanced smart contracts. Ethereum is also progressing slowly to adopt a more energy-efficient proof-of-stake protocol and is currently testing the effectiveness of sharding, which allows transaction speeds to multiply. Once updates are completed, Ethereum will be known as Ethereum 2.0. Being the biggest platform for deploying decentralized applications, Ethereum's ecosystem is too diverse and expansive to ignore and could continue to grow significantly in the future. Looking at the history of Bitcoin, these kinds of events are common,
There's nothing unusual about that.
usually resulting in a healthy growth phase within a 1 to 3 year range. Due to the diversity of crypto markets and the ongoing innovation within fintech, there is never a dull day in the world of blockchain. Well, that's it for today's video. Let us know in the comments section below if you have enjoyed it. Comment your opinion about the crash. Like, share, and subscribe before you leave.